Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Tuesday, April 4th, 2023. Before we jump into all the charts, please click like each and every time you watch the daily Apple report and subscribe to the Wicked Stocks YouTube channel. And check out wickedstocks.com, where we offer a full assortment of daily and weekly video analysis, including the daily Triple Q and the daily SPY report, just like you see here with Apple and Tesla. The Triple Q, the NASDAQ 100 ETF, the SPY, the S&P 500 ETF, also two individual stock picks a week that you never see on YouTube, and weekly analysis in the S&P 500 index, the NASDAQ 100 index, and the long bond ETF, the TLT, all for a very reasonable price. Check us out. If you don't like it after 5 days, just shoot us an email, and we will send you your money back, no questions asked. Let's take a look at the charts. This is a weekly chart. Just want to remind you that back in early January, once we tested long-term support in the lower 120s, sort of indicating that the low 170s should be considered reachable by some point in 23. And we're about 3-4 months into 23, and we are approaching it. It became a 3 to 5 month buy signal when we gapped and settled above this long-term channel top that is well below the market now at 137.66, and on the way up last week for the first time. I think it was Thursday of last week, maybe it was Wednesday of last week. We closed above this area of resistance that we knew was going to give the market some degree of trouble, some degree of hesitation, perhaps a monthly high, perhaps only a weekly high. But nonetheless, the 158.36 to 160.49 area was violated the middle of last week, and then indicated that targeted low 170s in as little as 2 to 3 weeks. And that's where we are right now. So for the day, 164.26 still remains an intraday support level. That contained yesterday's, that is Monday's selling pressures pretty well. And on the way up, we can quite easily today reach, I have 167.70 and 168.91. I don't like to give these ranges for session containment because there's just a lot of wiggle room for the day trade. So you day traders, you can sort of pick your spot. If you like to sell ranges from 167.70 up to 169.90, you can certainly do that. 168.91. 168.91 is this more steeply rising channel top, and 167.70 is the longer term one. They're both equally valid in my opinion, at least for the day. There is a case to be made that these could be considered sort of like two-star resistance areas, able to contain buying into later weeks. So 3 to 5 day swing traders could have at this area, but I want to sort of express a little caution because of this recent secondary buy signal that is one of several that has occurred over the last few months, indicating the low 170. So you don't want to get in the way of this up move, but nonetheless, it could be faded at least for the day and possibly into later week between 167.70 and 168.91. That area may well capture daily buying pressures, and we could perhaps fall off from here as we move, into later week. Let me go into the other chart here. There's your 167.70. So I think you've seen the point, and I will finish that idea with, if we close today above 168.91, and we could, that would be a healthy rally today. But if we do close today above 168.91, the long-term objective at 171.81, and on the weekly chart actually at 172.02, you can see them both up here, are likely to be reached over the next 3 to 5 days. And this area in the low 170s can absorb buying, on a quarterly basis, possibly through the third quarter. So, in terms of the 3 to 5 day swing trade, that turned bullish about 3 or 4 days ago above 160.49. And it really is more of a 1 to 2 week trade to the upside, because I think it's going to be a continuation upside into the low 170s. But as I mentioned, if you're a more aggressive 2 to 3 day, 3 to 5 day swing trader, you can begin setting a short or liquidating a long. If you've been long now for the last 3 or 4 days following last week's buy signal, you could liquidate some of that long position starting at 167.70 and ending at 168.90. And if we close above 168.90, the low 170s likely over the next few days. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Downside, I do still have 162.14 that is in reach today. If we break 164.26, 162.14 in reach, that is that spike high from a couple of weeks ago. That could be it for the day. If we close today below 162.14, then I'm expecting 158.36 to 160.49, probably tomorrow. Within several days anyway, if we close below 162.14, this is a decent zone of support. 158.36 to 160.49, able to contain selling through next week, and once again above which the low 170s remain a 2 to 3 week upside objective. I'm trying to see if there's anything I need to. I will say, and it's not going to happen today, but if we were to close below 158.36, we're another 3 to 5 days away from reaching this new trend defining 152.71 long-term speed line that is based in part on Monday's high. So any sell-off over the next few weeks should find a solid floor support presently at 152.71 and rising. And over the next week and a half, it will converge anyway with that big area on the daily chart in the upper 150s, low 160. So you can see this line will actually be converging anyway. So we'll be covering that on a day-to-day basis. I do want to bring up one topic that is that we awoke to on Monday morning. That is an OPEC production cut. It obviously impacted West Texas Intermediate crude oil. This is the May contract, is the lead contract. It is the one that you'll hear about in the news on CNBC, May 23 futures. 80.78 is a big level for West Texas Intermediate. This is a weekly chart. If we close above 80.78 by a 1% margin, 81.60 or higher any day this week, and certainly followed up on Friday with a settlement of 81.60 or higher, crude oil should rally another 15 to 20% into the upper 90s over the next several months, and that will very likely weigh on the stock market in the form of higher interest rates, higher inflation, a more hawkish Fed, and so that could spoil this rally. Or here's another way to look at it: if that does get up and underway over the next few weeks, and if Apple winds up testing the low 170s in the interim, that would be the impetus for a significant sell-off from the lower 170s if West Texas Intermediate were to sort of gain continued upside momentum following a settlement above 80.78 by that 1% margin. Until then, this market, the broader West Texas Intermediate, can fall off into later April, into the low 170s over the next 3 to 5 weeks, so forth and so on. So I just wanted to point this out. This is an important area to watch, I think, for broader market implications. Anything else to cover? I really don't think so. I can take a look at this chart. I mean, there's all kinds of things. That 158.57 converges with 158.36, that long-term speed line. We're not going to see this area today. I mean, we could, but it's just I don't see it happening. So we could see 162.14, which is the spike high from a couple of weeks ago, and only if we break 164.26 on an intraday basis. Until then, it's still all systems go to the upside for the day itself, expecting 167.70 today, the start of a range of meaningful resistance for the day at 168.91 that just might capture buying into later week, and if settled above, would then yield, I think, this targeted 171.81 formation within just another few more days. And I'm going to leave it at that for Tuesday's Apple Report. Please click like, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Wednesday's Apple. You have a great evening.